Time now for our Muni moment, and our next guest says there's tremendous value in bonds right now. He joins us now. His name is Nathan Will. He is head of municipal credit research at Vanguard. And let's talk about this tremendous value as it relates to the Muni market. Is this a close your eyes and just buy environment, or is there a little more nuance to that?
Thanks, Katie. So it's great to be here. Yeah, I'd say that we believe we're still going through somewhat of a Muni renaissance. As always, Munis remain a very high-quality asset class with very low default rates. And looking at yields in the market right now, they're tremendously attractive. We haven't seen yields like this in years, both on an absolute basis and for those investors in high-tax states such as California, New York, and New Jersey on a tax-equivalent basis. And besides all of that, credit is still in a very good position. We've got reserves and rainy day funds topped off. So overall, a very, very strong backdrop for munis as we head into 2024.
And Nathan, I like to talk about munis because you talk about actual things, physical things that you can feel and touch and see. Talk to me about toll roads and what you're seeing there.
Well, toll roads are a very good sector right now. You know, the ridership has been strong, or the number of travelers since the pandemic, and they tend to keep a ton of liquidity on their balance sheet, usually in excess of 1,000 days. So higher grade toll roads, always a very good bet.
What else out there do you see that's attractive, though, Nathan? I mean, beyond there's just sort of the normal stuff.
So we're focused right now on the healthcare sector, particularly not-for-profit hospitals. This is a very large issuer in the Muni market, a very important sector. So, you know, during the pandemic and post-pandemic, there was a lot of pressure on not-for-profit hospitals, mostly coming on the labor side. And as we've seen inflation start to moderate, and we're seeing strong utilization of beds, and we're seeing operating margins start to improve there. We think there's a lot of value, and we're finding high-grade healthcare very attractive. Now, you have to be very selective in this sector, so you know, you can lean on an experienced credit research team like ours.
Okay, and it certainly is experience. Well, can you dive a little bit deeper into that, though, too? Because, I mean, it's easy to say, okay, yeah, I mean, you pick out high-quality stuff, and obviously Vanguard, you have a whole army of folks to sort all that out for you here. But, I mean, kind of what's the general criteria where when you look at some of those hospital operators, and you can kind of separate the wheat from the chaff? What sort of creates that separation?
Yeah, you want to hone in on those hospitals that are market leaders, so they own most of the market share in a particular city or region, and also that tend to have a unique specialty. So children's hospitals is one example.
So Children's Hospital, definitely an area to keep an eye on. So too, in your notes, you write public mass transit. Of course, I'm speaking to you from New York City, where it's pretty much all we talk about. What are you seeing when it comes to mass transit broadly?
Well, public transit is a sector that we're keeping an eye on, you know, after the pandemic. Ridership has not, particularly in areas such as New York, the MTA in particular, ridership has not returned to pre-pandemic levels. However, you know, that can be mitigated by a lot of factors. In the case of the MTA in particular, you know, it's not wholly dependent on fare box. There are dedicated taxes and other sources of revenues that also support operations. So, you know, we ultimately do think that you know, public transit will be resilient in this new normal as we move forward in a more flexible and work from home environment. But you know, we're just keeping an eye on that.